Housing data has been pretty good. Jobless claims at 40-plus year lows. Is that the sign of an economy or a market that needs an injection of stimulus or rate cuts from the Federal Reserve?
Definitely not. I would say the news isn't all good. We're definitely slowing down, but the markets are pricing in a Fed cut this year, and I think that's completely unrealistic and also probably inappropriate. So I don't think that the Fed needs to step on the gas. I do think that our conversation around growth in the U.S. in the second half of this year will be very different from our conversation at the beginning of this year when the Fed was worried about Chinese growth, global growth, financial conditions tightening, a government shutdown, Brexit, and slightly lower inflation expectations. I think all those things will have abated by the second half of this year. Unfortunately, the Fed's capitulated to the markets and has really painted itself into a corner. So it would be really difficult for the Fed to actually put rate hikes back on the table. But if I had to choose between a rate hike and a rate cut, I would think a rate hike might be more appropriate later this year.
Well, Megan, you and others can say it's inappropriate and not needed, but that doesn't mean it's going to happen. We're 1 week away from that Fed decision. Do you believe they will ignore the pundits and say, we're going to cut rates? Will they cut rates next Wednesday?
I'd be shocked if they cut rates next Wednesday. I don't think a rate cut is on the table so soon. I think the markets are pricing one in for later this year. But there's very little that will probably come out of the next FOMC meeting.
All right, well, we've got a number this year. Do you believe, Megan, the Fed will stay on hold, do nothing for the remainder of the, I think it's 6 FOMC meetings in 2019?
I do think that the Fed will stay on hold. Like I said, I think the FOMC meeting, when the Fed revises dot plot down to 0 hikes for the rest of the year, was a communications disaster for the Fed, and that they really stuck themselves in a corner whereby even if it would be appropriate for them to hike rates, they're going to have a really hard time communicating that to the markets. They risk sending financial conditions even tighter, which of course feeds through into their reaction functions. So that would make it hard for them to hike rates rather. So I think that's going to be difficult even if it's appropriate. And I just don't think the economy will justify a rate cut. I think that growth will be stronger in the second half of the year than it looked in the first quarter of this year at least. And so I think the Fed's probably stuck not doing anything on the rates front for the rest of the year.
Yeah, just reminded our viewers, the dot plots from which you speak, that's basically just each Fed member putting his or her expectation of where rates are going to go. It looks like a giant light bright in my mind, actually, Megan. So here's the question. This has been a Fed that has flip-flopped before. They went from hawkish to very dovish. Is it possible they return hawkish? What if we get on Wednesday a rate hike or an indication they might hike rates? Is this a market and a valuation in a market that can withstand that?
So I think that would cause a ton of volatility in the markets. The markets aren't primed for that at all, but I also think that's incredibly unlikely. In fact, most of the communications we've heard out of the Fed recently were around kind of the triggers they view for a rate cut. Now, I don't think that's a sign that they will cut rates. It would be completely ridiculous of them not to actually be thinking about the conditions that would justify it. But I do think it means they haven't signaled to the markets at all that they're going to turn more hawkish, and the Fed doesn't like surprising the markets. And so I think that's really unlikely at this meeting.